Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week, and hopefully lots of great ideas and opportunities for you throughout the show. Well, this is a rare day as it's Thursday. Usually I do these recordings on Friday, and I was not around last week because we were moving. Well, everything has not gotten shipped yet for my studio, still waiting for that. So this is going to be, I'll call it a no-frills version of Market Week as we just kind of fire through this really quickly. And I'm going to show you most of what I show you, just not any transitions or bumps, as don't have everything loaded up right now. But I still think you're going to love the show. This week, the stock market chopped upward in these first 4 days, as earnings overall did lift the stock market. Some stocks got hit, though. Twitter, Texas Instruments, Boeing, Nflx, McDonald's, they all moved pretty sharply to the downside. But Biogen, Tesla, airlines, banks, and the banks are big ones, they help the market out in a big way, and they help for some small net gains that we're seeing on the week. Of course, Friday could change that. Stocks moved up early on positive news out of the UK on Brexit. It was thrown into chaos, though, after that, as the MPs kind of foiled Johnson's fast-track deal and now forced them to kind of beg the EU for more time, and then they face a new election potentially come up. So nobody knows how that exactly is going to settle out. And more upside came Tuesday as China came out and said they were optimistic about the trade deal. Yeah, trade deal is still out there, even though the market seems to be ignoring that kind of news. Thursday, market moved up on earnings, but then it started to chop around, and the economic data was not good on Thursday. Germany, they came out with very weak manufacturing numbers again, and their manufacturing sector is in recession. And U.S. durable good orders fell. I mean, they've really been weak. Business investment also weak. New home sales weaker, and prices of homes are falling. So here in the U.S., we do have some pretty negative news coming out. Of course, stock market ignoring that. The favorable period for stocks that we've discussed, Q4 and maybe into the beginning of the year, we think that's begun. Though the next 6 to 9 trading sessions have some downside risk, and I'm going to show you that in the short-term view. Twice this week, the market tried to get up and was poised to move to new highs, but it failed, and we got a little bit of a strong close on Thursday, but now it looks like Friday is going to be to the downside. So there are sellers there in this area over 3,000 on the S&P 500. So it doesn't look like it's going to have an easy time getting up through that, and we think that just for the near term, there is a risk. Is the market digests some big upside moves over the last couple of weeks, but then we think the new high is likely as stocks rally early in the year, late in the year, and early into next year. We actually have a minimum target on the S&P 500 of 3,100 right now, and it could make some gains beyond that. Analysts point to election years as positive years, and we say no to 2020. We think a bear market actually hit. So while I'm telling you now that I think the stock market could rally into the beginning of the year, I think this is going to be one ugly election year, one of the ugliest ever. And of course, we've got an impeachment inquiry going on, which may actually become an impeachment process. And I think that the central banks are going to find out that they're plain impotent. And what they're trying to do is not going to bring a lot of stimulus, though it might keep the economy from crashing. Economies, which right now are pretty weak, we think it's going to become a full-fledged recession. Now, most of the analysts out there and most people that are actually calling the market, well, they say the recession is not very likely. But we think this is a lot like the 1937 scenario, where the big crash came, of course, in 29. The market held up market recovered for some 7-8 years in a very wiggly way, and then it became another giant leg to the downside. We think that's a possibility, with the market having a very rough time of it into 2022. So we're going to stick with that, which is what we have believed is happening, and believe that while you could get some gains, there are, I think, a good likelihood that those are going to fail, and that the market's going to give some big declines next year and into the following couple of years. So I would say that if we get a good rally, as we expect, it's time to change your allocations. Stocks, we'll give them slight gains for the week. Dow Jones a bit weaker as Boeing and McDonald's did poorly this week. Bond market little changed. Gold started to perk its head up on Thursday, and gains are up about $8 for the week right now, or a little bit more, and I can hear or feel those engines revving. We've been looking for a good time for the gold market to start again, late October, beginning of November, and it just feels like it may not want to wait. We'll talk more about that in the short-term view also. We think that the dollar could be in trouble the next few weeks. It's so far up a little bit on the week, about 0.3, but we think that's going to turn lower and also feed the move in the gold market. And oil gaining about $3 on the week. It was really nice timing on our analysis, and we think that there is a little bit more on the upside in oil market to go also. Make sure you follow me on Twitter at askSlim and subscribe to the YouTube channel. And if you like this video, make sure you give us a thumbs up. We're going to look now at the best and worst stocks for the week. And what we do is we look at the 5 best, 5 worst, and we'll take a look here at the first one on the upside is Biogen. BIIB. This one had just one massive gain that you can see in here, this huge gain there. Earnings were good. This is all about their failed Alzheimer drug all of a sudden becoming great. And this timing, as you can see, now we do cycle analysis, and you can see the rhythms in here, and this low came just about on time as the major cycle and the minor cycle was making a bottom in there. If you don't understand cycle analysis, please go to the askSlim webpage, go to workshops, and you'll be able to get an introduction to the cycle analysis workshop in there, and I think you'll just be fascinated. So this low came pretty much on time. The Alzheimer drug is something that could be absolutely huge for them. They had a big break that you could see right over here when it failed, and all of a sudden it's back to life. So we think the stock is headed up to 340, right up over there. Full disclosure, I bought this dip that you can see right there in this last day, thinking it's going to go up and take out those highs. So good earnings, good results on the Alzheimer drug, and maybe a potential to make a good trade, as we think it's very unlikely that the first week up, as you see there on the cycle, is going to be the last. Very likely there's going to be more on the upside. Next one we're going to look at TSLA, Tesla. This stock has been repairing itself. Now you could see the beautiful cycle rhythms in here. Note the important low right over here and how it lines up here. Note the important low here and how it lines up here and the important low here. This was a slightly lower low or equal. This was a much lower low. And now you could see this one forming bullishly. It gets up here to the major 61.8% fib confluence. And all of a sudden, that looks like the spot it could rest for now. But then we think it's going to go up again. So it'll likely pull back. We have a target in here somewhere around the 280, 277 area on the downside over these next several weeks. But then we think it's going to take off again and maybe get into those low 300s up over there, 330, 340, where that next resistance is. We're not excited to buy it at the moment, but if it pulls back into this area, we would think that that would be a good buying opportunity under the area of about 280. 13% gain on the week. It shocked the street with fantastic earnings, and it's gaining some consistency in production in Model 3. There's the hopes that they will be able to keep producing that in the big way as the Model S and Model X, which is one weird car, falls off. Of course, they still have big headwinds because they are losing the tax benefits, so that's going to keep them from having massive gains on the upside, I think, but this is a much better pattern than it was, so we're going to like that one. BBBY is the next stock we're going to look at on the upside. This stock got very, very nice gains, and you could see in here that it's gotten into the sell zone. We have our colored phasing in this right now, and you can see that that's a beautiful rhythm that goes on in there. In other words, the green zones are the positive or rally areas, the yellow are consolidations, and the red is when they're negative, when they turn down from here and turn negative. Had a little red zone right over here. So when you get a red zone, you expect it not to be able to surpass the previous high. So this becomes the sell zone, and it's gotten up there right now in Bed Bath & Beyond. I do not see this as a turnaround situation. No news. I just think it's rebounded, and this is the place I think it's going to pull back. The next one, a giant winner, 10% on the week, is Lam Research, LRCX. This was one giant gainer that you can see, and look where it's come from in here. Semiconductor material category, and with Texas Instruments having some bad earnings, and I'll show you that in the worst for the week, this one really had good earnings. I had this stock on my list of stocks that was overbought based on its relationship to the 34-week moving average. Now, that moving average right over here, either when they get real far from there, they either converge back to it, or sometimes only back down to the 13-week moving average right over there. You could see that's what we think is going to happen. The distance from the 34 to the price of the stock is excessive right now. We think it's going to correct, like it did right over here at the end of that cycle. So you see the cycle bottoming right over here, bottoming right over here. That brought the decline, and we think it's going to decline here for a few weeks. Full disclosure, I shorted it today, looking for this excessive giant gain of 14% to, bring some sellers in. So we're just going to look for a downtick in there, and I think that's going to come pretty soon. Anyway, I have a short position on, so you can guess that that's what I'd like to see happen. LVS, Las Vegas Sands, that's the next one we're going to look at on the positive side. Had nice gains. About 8% on the week. The earnings were a slight miss. You could see there was a little bit of a cycle shift in here. So in other words, this low came a little bit early compared to where we were targeting over here. That's usually a bullish occurrence when it does that. What's going on in here is, the miss on earnings didn't really mean much because they talked about an aggressive growth plan. Well, investors like that, aggressive growth. So this early bottom right over here, likely to get you more advances, and you could see it projecting up there pretty good, as this is now what I would call a pretty good-looking stock. That is the 5 best stocks for the week. Now what we're going to look at is the 5 worst stocks for the week, and this is going to start out with one that is an absolute disappointment in here, and that is Twitter. Twitter actually breaks down that channel. It didn't really give you an opportunity to trade it on the short side, and it was coming to the end of this, what we call is a minor third. In other words, you could see this big cycle right over here and how it divides into 1, 2, and 3 cycles. Usually the third cycle brings you a pretty big decline. When the second one does, the third one usually follows, as you can see here. That points to about early February for that low. So there's a low due right in here in this giant downside week, 20% so far on that earnings miss. Their revenue growth really a lot weaker than they had hoped. We think there's a bounce coming. As you could see, we project in here. We think it's a sell. So we get a bounce in here. We think it's going to be moving down. We were really bullish when it was over here. We saw these positive formations. We projected 46, and it was just absolutely beautiful. We thought it would come down over here, but no idea it was going to be this weak as it was. Well, that's really a weak situation, and we think that a bounce is a sell in Twitter. Texas Instruments. I mentioned that one before as we saw Lam Research had the big gain. Texas Instruments, this one, well, earnings were okay, but their outlook was really weak, and that scared investors. And it was a downer for some of the semiconductor stocks, not Lam Research. And you could see that this looks like it's near the end of where this cycle ends right over here. Now you'll note, look at this, it got really far away from that 34-week moving average and then comes down to it right over here. It did the same thing right over here, far above it and comes right down to it. Note it broke well below it in this cycle and then came up through it. That's like a magnet, that 34-week moving average. We think that it is about done on the downside for now, Texas Instruments, but again, because there's a big gap in here, which you can see if you're on a daily chart, we think it's going to be able to rally, but not probably be able to get up all that far and then moving down again. So 8% down on the week in Texas Instruments. Now you talk about a company with problems. Holy cow. Boeing, I mean, this one really has been under pressure again. Now this week it's come back some. It was down a lot from last Friday through this week. Now it's come back. So it's only down a little bit on the week, as it had a pretty good rebound today of about $4. The earnings came out in here. They missed in a giant way. Well, there's more trouble ahead, more delays in our opinion, and who knows what these lawsuits are going to look like. When I look at this pattern, it points to declines coming all the way out over here to late December, mid-late December. That means this rally over here into this sell zone, well, we think it should be sold. So low came over here, which was pretty much in line, and that low is due out over here in December. So we think rallies right now are going to be fake. Next thing we're going to look at is Nflx, Nflx. If you looked at Nflx when the earnings came out, you saw a big gain right over here, but then it failed. Where did it fail? In our sell zone. Now, why we bring it this week is that it lost another 6% on the week. And the reason for that is that, well, they're facing massive competition. And to be able to try to overcome the competition, they have to raise a ton of money. And they're now going to try to raise $2 billion. And I think that their efforts to overcome the huge amount of competition out there from Disney and Hulu and the likes of all of that, well, not a chance. And this giant decline that you see right over here in this late cycle that you can see right there, that low, that, and then the failure in the sell zone, well, that says to me the stock is going a lot lower. I see it below this support level at 230. Coming out in the next couple of months. I think this is a very bad stock and in lots of trouble. So I would say that one picks its head up. I think it's a shorting opportunity. And McDonald's, MCD, is the one we're going to look at next. Now, McDonald's, I think this is a major top. Now, McDonald's down about 4% on the week. Earnings missed. Now, you see this beautiful, powerful cycle. And I note over here that this is very, very strong. We call this a right-hand translation when there's only a little correction in this area on the right side of the cycle. But this one, it's giving up 100% of this move. Right there, you can see it passed the 78.6 and almost down to this low right here. That's the making of a major top. And we would say that this stock, though, in the next couple of weeks, it could make a bottom and then get some kind of a rally in here. We think it is going a lot lower. And we're probably going to see declines of some significance into next year in McDonald's. So this stock, we think, is a pretty bad stock when you look at that. That is the 5 best and 5 worst stocks for the week. Boy, I really fired through that stuff. Trying to do it a little differently because I'm not using my regular equipment, so I'm trying to make this as comfortable as possible. Always want to encourage you to take advantage of the unbelievable amount of content that we have out there. Our memberships, we have trials for them that I really want you to take advantage of. Our level 1 membership is our weekly snapshot. That's the stock index report and our ETF review. That essentially is a great way to look at the different aspects of the market, the stock indexes, from the perspective of a swing trader or even investor. We also have special videos in there, and what's coming soon is our Slimulator Momentum Tracker. It's going to automatically, on all stocks, give you our algorithmic output to tell you the condition of those stocks, all of the momentum conditions that we put out there. You're going to love it. You're going to be able to put in your own watch lists, and we're going to be beta testing that very soon. So that's just in level 1, which is just an incredible value. Level 2 has over 400 videos in it. You could learn about trading and investing and technical analysis and trading psychology and different stock groups, and it's just an unbelievable way to learn. And you get our stock index report daily snapshot and live stream. This is where we put in the important levels, support, resistances, acceleration zones, everything that you need to be a short-term scalper, day trader. For the indexes, it's phenomenal. People are loving it. So level 2, and if you get that, you get everything that's in level 1. Level 3 is our Slimulator algorithmic analytical engine on the top 84 traded stocks, futures, indexes, ETFs. It's just an unbelievable, perfect thing that you need to really get a great feel for everything that you're looking at in a 3 to 6 week window. So in other words, it's perfect for option traders. So we want you to really get a look at that. And of course, you get everything that's in level 2 and level 1. And of course, level 4, you get my charts on your TOS platform, our preferred broker, where you see all of my cycle analysis on these same 84 symbols. Everything in there that you will need to really learn the conditions of these stocks. You get that plus everything in level 3, 2, and 1. You can get our membership trials. All you have to do is write to Matt, M-A-T-T, at askSlim.com. And you can get trials on level 2, 3, level 4, and you will be able to just see this phenomenal amount of content that we have in there. We got a big team now. We have RV doing a ton of analysis. He's our expert in cycle analysis. We have Matt, who's our business development guy, and he does the stock index report and just phenomenal information that he puts out there. We have Brian, who does a lot of the stuff that he brings that you get on a lot of the charting. Just a whole team that's working for you all of the time. And then, of course, we have our support team that works on our website and our membership. So you subscribing to us, taking these trials, is what allows you to keep getting this Market Week show at no cost. And it's just really important that we get people to come on and subscribe, support this team, support this work, so that they're going to be around for years, even beyond me. Believe it or not, there's a beyond Slim, and these guys are the ones that are going to carry the ball. So just help support us, help support them. Sign up for a trial membership. Write to Matt, M-A-T-T, at askSlim.com. That is, if you're not already an askSlim member. All right, so now what we're going to do is we're going to switch over and we're going to look at the short-term view for the coming week, where we look at the 5 major indexes. And we're going to switch back over to the charts, and I'm going to give you a daily chart. And we're still on McDonald's here. So we're going to first do light crude, a /CL, and look at that short-term analysis. So I'm going to make sure that I'm on a 2-year chart right over here because I want to get everything to line up properly and then come back in. So what we see in here are the cyclical rhythms also on a daily chart. You can see that light crude got support in this lower support zone right over here, and then started to move up and got above this level. Now that's good because it held up on the support zone and then made a higher high. So you can see our projection is for it to get higher into this area here. That's about 57 and a quarter. This area up here is about 58 and a half. There's a potential for trying to get up into there, but then we think it'll back off again. We're really looking for some choppy period in here and modest upsides in there in the oil market over the next month or so, as you can see how that works. So we're going to look for a small up week in here. Momentum is neutral. Now, momentum was negative right in here, and it did turn up neutral, and look at right over here. Momentum turned positive here on Thursday. So we think that the oil market has a chance to do a little bit better in this improved situation. That is light crude. The next one we're going to look at is the gold market. Now, I'm chomping on the bit. I bought a little bit, and it's kind of premature as far as how my analysis goes. My intermediate analysis is suggestive of the fact that there would be one more dip in here. You see this low timing here about 2 weeks from now into that area, and here's where the silver low comes over here in mid-November. So the analysis, and you could see these tiny little bars in here, the analysis is suggestive of the fact that it's going to dip one more time, but it is looking strong to me. Momentum, it can't get anything going. It's completely neutral in here. I'm seeing buying come in, and I'm feeling like it's time to be nibbling. Even if you have to sit through one more dip, that there could be some decent upside in here. And once we get into this area of these lows that we're looking for right there in that gray zone, timing-wise, supports, in the area of 1470. There's another one around 1450, another one at 1445. So you could get a dip down there, but I'm not feeling it. I'm feeling like this thing is ready to surge on the upside. And part of it is because of the dollar pattern. The dollar pattern is really weak, and usually they're inverse. So you could see our projection that it has another week and a half, 2 weeks on the downside. My gut is telling me something else, and sometimes I like to listen to it. So I nibbled in the gold market today, actually, when I saw that strength starting to come in. I may be early. I've got plenty of room to buy more if that's the case, and I just want to be in place for what I think is going to be a big upward surge coming in the gold market. We're going to call this week in the gold market a little more attempted to the upside, and then moving back down, not be able to make real big gains this week, and maybe still extending that correction. One of the things that I don't like is this projection oscillator got overbought. Now, this was negative and now went neutral. So it's not as bad when momentum is neutral, but if this goes negative again and this is overbought, that's going to bring another decline to the downside. So I'm skeptical here, and at the same time, I really have this gut sense that gold is going to be moving soon, sharply to the upside. When you look at the dollar, you're going to get a sense for why I'm feeling this, and that is the dollar has got problems in here. And part of it is that the Fed is printing dollars like they're madmen. And they're printing dollars and flooding money into the repo market, and they're doing QE4, and it's really QE4 ever, because they're never going to be able to get out of this. And what we think is this rally in the dollar is going to end. Maybe it can get up here a little bit higher, but we don't really think so. The best level I see right over here is just around 98.10 or so. Notice the momentum in here negative, the projection oscillator overbought. When you get that condition, the probability is high that it's going to move down again. And if it moves down again, like we're projecting in here, then the gold market is likely to be moving up. So this is part of the reason why I think that there's risk in the dollar, and there's risk of missing some of the upside here in the gold market. So I'm just going to stay with that theme, believing that it just seemed time to nibble on the long side in the gold market. You get a breakout over 1522 in gold, well, I think that there's going to be a sign to pour it on if that happens. The next thing we're going to look at is the bond market. That's /ZB. And closer look right in here. Now, the bond market looks to me like it's got one more potential little downside in here, but then it's probably going to pick up again. And you can see that projection. These, when you get into these nested areas of lows that you can see right over here, it then sets up upside. So you see what happened right there, and it blew to the upside. And now we're in that same type of a period right over here, and we think it's going to move to the upside in there. This portable monitor, the portable system, just doesn't quite, in this studio, give me the detail that I'd like you to see on these charts. So I'm just going to blow that up a little bit and make it a little steeper so that you could see that we're in this area where it maybe comes down a little bit in here and then turns up again. We're going to call this week in here a small changed week because we think that, well, it's, a down and then up, and that probably doesn't give you much change coming up. But overall, the bias probably for the next couple of weeks is going to move back to the upside. So now let's talk about the stock market. The stock market certainly did not last, the correction did not last as we thought it would back in the beginning of October, as it made this just fantastic bottom right over here and then exploded to the upside. So the nature of this type of a pattern that you see right over here, where this is the dominant cycle that we're looking at right here, the blue one, it's not leaving a lot of corrective time. And this is about maybe 6 to 9 trading sessions right in here. So we're going to look for the next week to week and a half on the downside. The period of risk that I had in here before is still there. It's just simply much less risk because of this structure that we see here in the patterns. We're going to look for a pullback in here to about 1975 in the S&P 500 over the next 6 to 9 trading sessions, and then be moving up again. This move over here is likely to be the one to see the market move to new highs. This one is likely going to tire in this area, and then we'll see it be better later on. So this is the resistance right over there, right around that 3025 area, 3027, that old high. Could try to just tickle it right now, but I don't think so. The news overnight wasn't great, and I think we're going to see a down day on Friday. So I think that 2975-ish is about the area I think we're going to see a test. And then after that, I think it's going to be another explosive move to all-time highs in there. Again, beginning of the show, I said 3,100 was likely going to be our target. I still think that is a reasonable target, though there is other targets up around 32, 3240. So we could get some pretty good sizable gains in this last quarter of the year into the beginning of next year. We're going to call this a down week in the market, testing this level right over here. It's kind of a bold call. It's like threading a needle, because I think overall the market's in this uptrend, and maybe test 3022 early, but I doubt it. Maybe much more likely to come down over here, 2975, and then have this big up move. We'll call it a down week, momentum up. As you can see, it's quite strong and getting stronger as the slim ribbon widens out over here. That's not going to allow very big declines. And like I say, if it gets to the bottom of the slim ribbon, that might be the worst we see in there. So that is a look at the S&P 500, and then we'll call it just a down week. I hope this was great information for you, and we will expect to be back on our regular studio equipment in the coming week. Please do write to Matt at askSlim.com, and get our trials, and that's if you're not already an askSlim member, and you can get trial for level 2, level 3, level 4. You could try our 14-day, $14 one. Just lots of ways that you can support us and get tastes of our content. That's it. I want you to be very careful. It is so crazy out there, and I'm always wishing you great trading.
Well, I'm going to sit and I'm going to do a steady show.